Welcome to this explainer. Today, we're unpacking a story that absolutely sent ripples right through the heart of the American defense industry. We're looking at a sudden, highly unexpected, and honestly pretty opaque corporate shakeup at L3Harris Technologies. They are one of the most central aerospace and defense contractors in the country, and what happened here is basically a masterclass in corporate governance, market reaction, and crisis management all rolled into one. And as you'll see, we've got 3 vital numbers that are going to guide us through this whole analysis.
Okay, let's dive into this. On August 17th, L3Harris dropped a bombshell. They announced that their chairman and CEO, Christopher Kubasik, was stepping down effectively immediately. And no, this definitely wasn't some planned, phased retirement. The company stated the decision followed an internal board investigation, which found conduct inconsistent with the company's code of conduct. So one day, you're running a massive defense empire, and the literally next day, poof, you are entirely gone.
Section 1. The shocking departure. Navigating the information gap.
Look, whenever a really high-profile executive leaves abruptly like this, there's an immediate, almost overwhelming temptation for the market to just wildly speculate. But to actually understand this transition, we have to navigate the information gap by sticking strictly to the verified facts. We're not going to play guessing games on what that specific, undisclosed code of conduct violation was, simply because the company hasn't made it public. But here's the thing. While L3Harris kept those specific details under wraps, so the crucial point is how incredibly deliberate they were in outlining what the violation was not. They explicitly stated the matter was not related to financial reporting, not internal controls, not operations, and not customer relationships. The board drew a very sharp, clear boundary here. They essentially told investors, hey, we have a leadership issue, but the financial mechanics and the operational integrity of our business, those are perfectly sound. It was a highly strategic move designed to just calm the markets down.
Section 2. The severance mystery.
If you really want to gauge the severity of a corporate departure, you don't just read the PR statement, right? You look at the money. In the corporate world, executive compensation details and separation agreements usually hold the most revealing clues about how an exit really went down. When a top executive, especially a chairman and CEO, leaves a publicly traded giant, there's almost always a complex, heavily negotiated golden parachute. Investors immediately look to those separation terms. So you might be wondering, what were the financial terms of Christopher Kubasik's separation arrangement? Well, get ready for this, because it's a data point that speaks volumes.
$0. Yep, 0. That is the reported amount of severance the outgoing CEO is going to receive. Just let that land for a second. For the head of a massive defense contractor to walk away with a flat 0 in severance is incredibly unusual. It really underscores the strict, hard-line boundaries of the board's decision regarding that code of conduct violation.
Now, just to be entirely factual and totally neutral here, there is a slight nuance to this arrangement. The terms dictate $0 in severance and absolutely no additional equity awards. However, he does retain his previously vested stock options. But the headline here remains really stark. There's absolutely no further financial cushion provided by the company for his departure. The company disclosed the what, but they deliberately didn't disclose the why behind this exact structure, leaving the facts to just speak strictly for themselves.
Section 3. The 80% insider advantage.
So the CEO is out immediately. What in the world does the board do next? Usually, a lengthy, disruptive external CEO search could paralyze a company for months. But instead, L3Harris deployed a really strategic defense mechanism. They didn't look outside at all. They appointed an insider, Sam Mehta, and they did it instantly. And this brilliantly illustrates exactly why he was the absolute obvious choice. Mehta previously led major businesses inside L3Harris that represented more than 80% of the company's total revenue. Think about that. The board didn't hand the reins to some newcomer trying to learn the ropes. They handed them to the person who was already, fundamentally, running the vast majority of the company's money-making engine.
So why does this 80% insider advantage matter so much? Well, in the aerospace and defense industry, operational continuity is literally everything. You're dealing with enormous contracts, incredibly complex government relationships, and development cycles that take years, sometimes decades. Any leadership disruption creates major uncertainty. By promoting Mehta, the board prioritized immediate continuity. He already knows the organization deeply, he already understands the government customers, and he can step right in to protect those long-cycle programs without missing a single beat.
Section 4. Wall Street's reaction.
Even with that incredibly swift insider appointment, Wall Street still had to process the shock. I mean, a major defense contractor losing its CEO overnight isn't something markets just brush off. And the company was sending out dual, almost conflicting signals to investors at the exact same time. The immediate financial turbulence really reflects this.
The market didn't wait around for all the details to settle. Right after the announcement, L3Harris shares dropped. Reuters reported a decline of about 3.3%, while other market reporting showed it dipping as much as 4.6%. Now, what's really interesting about this slide is that this 3 to 5% drop is the visual representation of Wall Street's immediate shock. It's the market actively, in real time, digesting an unexpected leadership gap.
But here is the critical counterbalance. At the exact same time the company announced the sudden departure, management emphatically reaffirmed its 2026 financial outlook. This is that second signal I mentioned. They're telling investors, yes, the leadership at the very top changed today, but our expectations for the business, our profit, our revenue, that remains entirely intact. It's a really bold statement that the underlying machine is healthy.
Section 5. The execution phase. This brings us to the most critical part of the whole story, the execution phase. Look, L3Harris isn't just any company. They sit at the absolute center of America's aerospace and defense industry. The stakes for maintaining momentum here go way beyond just one company's stock price. We're talking about impacts on national defense infrastructure. Let's move to and see how this builds into a much larger corporate story. L3Harris has grown significantly through massive, really complex moves, from the 2019 merger of L3 and Harris to the huge 2023 acquisition of Aerojet Rocketdyne. They are managing an incredibly complex portfolio of defense technologies, and that is exactly why a sudden transition in 2024 is so pivotal, and why hitting that reaffirmed 2026 financial outlook is going to be the ultimate test of their stability.
So how do we actually measure Sam Mehta's success moving forward? Investors are going to have to watch these specific metrics to see if he can maintain that operational momentum. Are we going to see changes in corporate strategy? Are those massive, multi-year major program schedules staying on track? Will we see any shifts in how they allocate capital? And above all, will there be any updates, positive or negative, to that financial outlook? The real test isn't the initial press release, it's what actually happens over the next few quarters.
As we wrap up this explainer today, I really want to leave you with a core data framework. If you remember absolutely nothing else from this analysis, remember the 3 defining numbers of this leadership shock, because they really tell the entire story.
Number 1, 80%. This represents the sheer scale of the new CEO Sam Mehta's insider advantage. He didn't just casually work at the company, he previously led the business units that generated over 80% of L3Harris's entire revenue. It was a rapid, internal transfer of power designed specifically to keep the defense giant moving forward.
Number 2, $0. This is the highly unusual, stark financial reality of Christopher Kubasik's separation agreement, a flat $0 in severance following a board investigation into an undisclosed code of conduct violation. It's a severe financial punctuation mark on a very abrupt exit. And number 3, -3% to -5%. That was the initial market drop as Wall Street reacted to the disruption. It's the metric that proves no matter how smoothly a board tries to handle a transition, a sudden change at the very top of a defense giant is always going to cause a tremor.
Which leaves us with the most important question of all as we watch this execution phase unfold over the next year. Will the market eventually look back and treat this simply as an isolated, expertly managed governance event, or as the first sign that reveals deeper challenges within the company? Keep your eyes on L3Harris. Thanks so much for joining me on this explainer, and as always, keep learning.